I knew this was coming. There were warnings.
Hello everyone and welcome into CrushTheStreet.com. I am Kenneth Amaduri. I've got a few things on the agenda today that I do want to talk about. Let's start off with Bitcoin. Haven't touched that in the last couple weeks. Bitcoin, according to Winkdex.com, is at 382.88 at this moment at February 12th, 2016, as I record this video. It's under $400 a coin, and we saw it go under $400 with the whole block size debate, and also Mike Hearn coming out and discrediting and saying that Bitcoin was a failed experiment. Of course, his word had some weight because he was a contributor in the Bitcoin process. So looking at it now, we have to decide whether or not there's value going forward. And I do believe there is value going forward. The infrastructure is being built out, and the debate size, the block size debate is being patched up. So with Bitcoin industry leaders calling for a consensus on the block size debate and a new patch just released with good community support, it seems a resolution is on the near horizon for Bitcoin to scale to higher demands with the market. The price has been roughly flat for weeks in comparison to the 6-month long-term volatility that we've been seeing. And this is important that we do gain some foundation here, and Bitcoin continues to move forward, and I do believe that it's going to continue to move forward. Now, according to NodeCounter.com, they're reporting 14% of Bitcoin nodes running the new classic software supporting 2 megabytes block size, double the current size. The number of these nodes supporting the increase has tripled in just a week. So this, again, is confirmation that we are moving into that direction, and that a resolution is being reached within the Bitcoin community, and we can expect higher prices in the future as these issues begin to work themselves out. So I wanted to talk about the Dow Jones and the S&P 500, and the situation does not look good. We know that stocks have been rough. It's been really hard on stocks. It's been hard on global economies. It's been hard on unemployment. And it's been difficult for all the people in power to spin this to make it look like a recovery, because it's not a recovery. And I'm going to show you with some technical analysis, something I actually really don't do a whole lot of, but the simple moving average. Watching what happens between the 50-day compared to the 200-day is significant. So the 50-day moving average is an average of what has gone on over roughly the last month and a half, just under 2 months. And the 200-day moving average is a longer-term trend. So when the 50-day crosses the 200-day to the upside, hey, that's bullish momentum. And when the 50-day goes down, well, that shows that things are going in the downward direction in the near term. So the most recent events have been negative for the market. And when it actually crosses the 200-day, technical analysis technicians see that as a turning point for the market. And here we have that. In January, we saw the 50-day moving average go below the 200-day. And you can even see that back in August, the 50-day crossed below the 200-day moving average into September. And then from September, October, November, we saw it go up into December. And then January, boom, slammed down, bearish trend that we are seeing, along with all the macro data. And I know a lot of you aren't into technical analysis, but this is kind of something that confirms all of the macro data that we've been talking about, the unsustainable situation. And we are seeing it confirmed with the technicals here. The S&P 500, same exact thing. 50-day moving average goes below the 200 in August, and then we see that again January, boom, and we see it way below the 200-day moving average, and it's very substantial, it's very significant. Following the rate hike and the global uncertainty, all the countries, almost every country around the world is seeing market volatility and central bank intervention. It is really bad out there. Countries are seeing their currencies hit all-time lows, and precious metals are reacting positively. So U.S. stocks, this was the Bloomberg headline today because the stocks were actually up 300 points. And U.S. stocks halts 5-day slide amid an oil rally, treasuries weaken. So oil actually went up about 10% today, which was pretty substantial. Something, by the way, you don't really see happening with precious metals. Gold and silver don't have those big jumps upwards. We did see gold move pretty substantially over the last month or so, but a one-day move, a 10%, would be pretty substantial, and something I believe the cartel would fight very hard against to allow to happen. But we have seen that with oil. Oil did that today. So gold is right now at $1238.47. Crude oil up about 11%, 10.99% at $29.09, up $2.88 for the day. Silver's at $15.73. And the commodity index is actually up today, I think mostly due to oil. So interesting story posted by Liberty Blitzkrieg, Michael Krieger's site. Headline news: lines around the block to buy gold in London. Banks placing unusually large orders for physical. So Bullion by Post, Britain's biggest online gold dealer, said it had already taken record day sales of 5.6 million pounds of gold as traders pile in following fears the world is on the brink of another financial crisis. And Bullion by Post also said they take orders regularly online up to 25,000 pounds on the website, but they also take higher amounts over the phone. And they were explaining that they had received a few hundred orders overnight and frantic number of phone calls in the morning. And the bullion market has been building with interest since the end of last year, but this morning things have gone bananas, said Mr. Halliday Stein. This is the owner of this online dealer, Rob Halliday, the founder and the managing director of the bullion dealer. He said that some London banks are placing unusually large orders for physical gold. So this is interesting. It's a sign of the times. It's a sign of what is to come. There are a lot of things that we've been talking about, and this again is just another sign that the money is moving to precious metals, and gold is a crisis hedge, and we are definitely in a global crisis. So let's move over to oil a bit more. A big story that was brought to my attention by the SRS Rocco report, Steve St. Angelo, Ecuador's oil industry catastrophe. Ecuador tried to call for an emergency OPEC meeting to combat falling oil prices, but OPEC is not seeming to budge, and they won't meet until June of this year. So Ecuador, according to this article, might be selling oil for as low as $20 a barrel and is dependent on the revenue for 30% of government functions from the industry. Now, the president, Rafael Correa, C-O-R-R-E-A, I can't roll my R, so I won't try that, said on Tuesday that South American nation is receiving as little as $30 a barrel for its crude, but their production costs average $39 a barrel. They are concerned. They are worried. They want higher oil prices. But the macroeconomics of this whole situation isn't allowing it. The global economic meltdown isn't allowing it. And when this, just to show the collapse of what has happened here in Ecuador, when oil was trading over $100 in August 2014, 18 months ago, Ecuador had 27 drilling rigs working in the country. Today, they only have one. That's a 96% collapse in just 18 months. And their oil has totally been gutted in Ecuador's drilling rig industry. And again, the reason for this huge decline in Ecuador's drilling rig industry has to do with simple economics. You can't continue producing something at a loss. And in the words of the article, especially at a huge loss. And this is true across the board. This is true of the shale oil industry in the U.S., which needs what, $70 oil? They can't produce in a profit. In fact, the majority of the good jobs that was produced from 2008 to now has all come from this industry. Shale oil was a major driver for the actual good jobs. So with $30 oil, $26 oil, $28 oil, we lose the best jobs that we've actually gained during the financial crisis. Now, maybe we'll continue to get bartenders and waiters, but not those solid, good jobs that we're paying a lot of money. And that's a big deal. And companies are suffering. You got BP suffering. You got Chevron suffering. You got ExxonMobil suffering. ConocoPhillips. These companies are suffering at low oil prices. These aren't just shale oil companies either. These are major oil companies. And they are having a hard time with this, and it's a global problem. And again, one of the effects of the global meltdown that we are seeing at the moment. Thank you everyone for joining me today on this news update. Be sure to check in for more interviews and news updates just like this one. We appreciate the comments, the likes, and if you're not already subscribed, please subscribe. Thank you all for the support. We will be back soon. Thanks so much.